The median sales price in DC Metro has gone up 6.2% year over year. Not as crazy as the price increase over the last 7 years, but I do have some predictions for you. Before we get into the specifics of the DC Metro area, let's take a wider lens at the economy and the housing market for 2024. The number of sales nationwide has dropped from 6 million sales in 2021, 4 million in 2023, and expected 3.8 million in 2024 nationwide. That's almost a 40% drop in total home sales over 4 years. This is for existing homes, and it doesn't count new construction. With high interest rates, limited inventory, and elevated home pricing, statistically, it has been a slow and challenging market across the country, to say the least. For perspective, historically, we would expect somewhere between 5 million to 5.2 million sales, and we haven't seen this low of sales nationally since Michael Jordan uttered those famous words, "I'm back." For the non-sports fan, that's 1995. Dare I say this is the worst market in almost 30 years? And with that, we have some supply and demand constraints, along with consumer sentiments behind it. It is in my opinion that it's a combination of purchasing power and affordability, plus the group of buyers who need to buy a bigger or smaller home, but have the locked-in rates of 2 and 3%. From there, we can use common sense and deduce who will want to sell the home they're living in, since the low interest rate makes the monthly cheap and the equity growth gained during and around COVID, the incentive to sell becomes very low. And here is what we're seeing in the DC metro area. But real estate is hyper-local, and looking at different cities, counties, and neighborhoods, you will see some that have increased, some that have decreased, and some that have pretty much stayed the same. First, let's talk about the median home prices in the DC metro area. With the Washington DC metro median price of $606,300 year to date versus $571,000 in 2023. DC proper is $660,000. Let's move over to Maryland. Montgomery County is coming at $615,000, gorgeous Prince George's at $440,000, and Frederick County at $485,000. Moving over to Virginia, we have Falls Church coming in at a whopping $1.125 million. Loudoun County, $739,000, Fairfax County, $732,865, Arlington County, $724,250, and Fairfax City, $760,000. And we're wrapping up with the city of Alexandria at $695,000. Every location is up year over year. What should we think about 2025? Let's take the lens of big to small again, starting with the economy. The good news, job growth. And I love to see people in this country employed and providing for themselves and their families. The bad news, inflation is still rearing its ugly head, and that's why we are expecting only 1 to 2 cuts for 2025 for the Fed rates. What does this mean? Long term, the Fed's goal is to lower the cost of borrowing, which makes homes more affordable. But based on these reports, there won't be much lowering the rates as much as everyone was expecting. And we know the higher the Fed rates, the higher the mortgage rates will be. So what does this mean for real estate in 2025 and beyond? Well, that's where we bring in the experts, such as economist Lawrence Yun from the National Association of Realtors. We expect mortgage rates to land somewhere between 5.5 and 6.5% over the next couple of years with the current expected Fed rate cuts. Nationally, we're expecting a 2% price appreciation up to $410,700 for 2025. Experts expect the sales of 4.46 million. That's a 9% increase, which is massive. You might say, Ryan, that's great and all, but how does that tie into DC and the surrounding metro areas? And where are we going in terms of pricing? Now, I'm not a crystal ball, but let me ask you this. How can the number of sales go down and the median price go up? It's because the people who need to or have the means to are still doing real estate transactions. Let's start with the areas that pull back the most in pricing. Most areas are pretty stable, but DC proper has had a pullback. It's not showing in pricing per se, but we see in the days on the market. So Washington, DC has a days on market of 22 days. For perspective, Prince George's County has days on market of 12 days, and every other county in the metro area has 8 days or less on the market. DC had a condo development boom, and now kind of a condo development bust, with a surplus of condos. So if you're a condo buyer in DC, the world is your oyster. Moving to multifamily in DC, there has been blood in the streets. It's an investment and has to make financial sense. With high interest rates, it also has made less and less sense. Also, the risk has to be worth the rewards. Landlords can't put a poor product on the market anymore. Properties need to be updated and include washer and dryers to be attractive to tenants. And with TOPA, that's the Tenant Opportunity to Purchase Act, rent control, and permit issues, the risk has increased drastically. Also, there's less interest in fixer-uppers because of the cost of renovation. the times of permits, and the cost of the money. So primary home buyers are less interested in those types of products and more interested in move-in ready properties. Clearly, we can't underestimate the effects of interest rates on affordability. However, it does seem like 2025 is a setup year for 2026 and 2027. Similar to the national predictions, I expect more sales across the board as consumers adjust to the more long-term interest rates that we have and become more comfortable transacting. At the beginning of 2025, I just want to let you know that I have a lot of cool things planned for this year. Bigger videos, more in-depth videos, and helping you stay informed on all things real estate, lifestyle, and wealth building in the DMV. Thanks for tuning in, and see you guys on the next video. Be the bridge.